Today I am with Viki Chervenkova, the Money Goddess Guide, to talk about how you can have a midlife money breakthrough or midlife money reinvention. This is how you can retire wealthy, even if you started late, even if you started as late as I have in your 40s and 50s. So let's get on with it.
Great to see you again, Lauren.
Lovely to see you, and so excited to discuss this because I think there are so many women and men who reach midlife, realize they haven't actually catered for their retirement. So that's how I felt when I was going through your program. I was like, oh my goodness, have I missed the boat? Have I left it too late? And I'm so glad that I have actually started investing now. So let's talk about it. Tell us how it's not too late, please, please, please.
Well, it's never too late to do anything, first of all, right? I've seen so many memes with famous people who actually started their career and their accomplishments later in life, like in their 50s, in their 60s, even in their 70s. And it doesn't relate only to career and accomplishments in business and life, but it also translates to how we can do so much better in the second, even more beautiful part of our lives with our investments also. Because to make these long-term investments that we will be talking about work for you in the best possible way, you need 10, 15, 20 years of time for accumulation to get in, for compounding interest to do its magic. And nowadays, we tend to live so much longer. So even if you had planned to retire at 55, 60, 65, we still have a long way to live in our 80s and 90s. And so even if you start in your 50s and you give it 20 years, you'll still be young at 70 and can take advantage of what has accumulated for you until then. So it's never too late, basically.
I'm so excited about that. My mom is 81, and because I jumped in on this investment journey, she decided she's going to go for it as well.
Ah, this is so exciting. It's like a whole new chapter within a new chapter of your life. So it's like opening new pages every day and learning and growing until you just say it's enough. When we know a lot of people nowadays, including you and me and your mom, whom I adore, we try to keep learning every day till the last day that we're meant to spend here on earth. So I'm super excited. 81, here we go.
I love
Investing.
it. It's so exciting. She said, I want to do it as well. I was like, okay, we might have to adjust the shares a little bit. So I'm busy learning about that. So this has been such a learning curve for me. First of all, since I started looking into how to invest here in South Africa versus investing elsewhere in the world, I've landed up on some amazing channels. So shout out to Money Marks, Peter Marks on Money Marks. I'm loving those videos. And I have learned so much. First of all, that the best way to invest here in South Africa is to join Easy Equities. So if anybody wants to invest in South Africa, I'm going to place my Easy Equities link and referral code down below so that you can get 50 Rand. 50 Rand, I know it's not very much, but it's something when you invest
It's
it in the
free
right
money.
stock. Free money, yes, exactly, that you can go and play around with because you're going to take that 50 Rand and you can invest it in whatever you like. How exciting is that?
So you basically can
Yeah,
start with that without even investing your own money first. You can
exactly.
use this free money and try it.
Exactly. And then if you also decide that you're going to refer people to Easy Equities, the way they work is they give me 50 Rand for you referring you, and they give you 50 Rand when you start, which means you could go refer 10 of your friends, and then you've actually got 500 Rand that you can invest. Like, why not? And so what's been fun about this is okay, first let's get it before I tell them how exciting it is to look at all the different ETFs. I'm going to have you explain exactly what an ETF is rather than me bumble through that explanation. I'm so new to
Yeah.
this.
No, no problem. Oh, well, to explain what an ETF is, we first need to start with the basics, like what a stock is. I'm assuming a lot of people know what a stock is. You buy a portion of a company that's publicly traded, so it's not a private company. They offer parts, little bits and pieces of the company on the market, and you can buy shares or stocks from that company. Now, when you combine a lot of shares or a lot of companies into a single basket, that's called a fund. And you can buy a share of that fund, which means that you automatically buy portions of stocks from all the companies that are included in that fund, which immediately gives you diversification, which is super important when you start investing. So it means that you do not bet on a single company, you do not bet on a single industry, or even on a single country or region, but you diversify your portfolio as much as possible. And that also includes a split between how you invest in stocks and what portion of your investments goes in much safer and, of course, with a lower interest rate in terms of investing in bonds. But let's not go there. Just let's focus on the stocks and the funds. Okay, so funds are like ready to buy baskets of stocks from different companies. It could be from a single region or from a single industry or a much more broad fund. So it depends on the strategy of the fund. And you just buy shares from it, and the portfolio is already built for you. So you don't have to pick individual stocks and individual investments. Now, when this fund itself is publicly traded, so it's not a hedge fund, so it's not private, and basically anyone can buy from it. It's publicly traded on a stock exchange, and you can buy it as if you're buying a stock. Okay, I hope that makes sense so far.
Yeah.
Okay, so from this level, we now go to what I'm most passionate about. That's index exchange traded funds. So these are funds that are available on the stock exchange. So that's why they're called exchange traded funds. But on top of that, they are tied to a specific index. So an index is just a conglomerate, an aggregate number that shows you how well a specific market is doing. So the most famous index that we know globally is the S&P 500 index, which tells us, which shows us every day, every hour, every minute, how the top 500 companies in the United States are doing in real time. So it depends on their stock price, it depends on their income, their profits. A lot of factors go into that. But the S&P 500 is, just a mark that shows how that economy is going. And there are a lot of indices around the world. So you can pick an exchange traded fund that follows an index that you are interested in. And it could be a global one, even. There are indices that give you how well the global economy is going. So, yeah, a lot of different options.
Yes, and that's what I got so excited about with these funds because Peter Marks has been recommending one and it's very new in South Africa. It was only started in 2021, but because it's tracking an index, the index is older than that. I can't remember the exact name, but I'll type it below in the description. So I got really excited about the S&P 500 because of the Warren Buffett story. Please tell the Warren Buffett bet story because I love that story.
Well, this could basically apply to a lot of other index ETFs, this story and this example. So it's like an urban legend in the investment world, but it's a true story. And it goes like this. Warren Buffett, who, if you don't know who he is one of the top investment gurus in our times, who, by the way, became a millionaire and a billionaire only after I think he turned 60 or something, because he gave his investments time to accumulate and to grow, and they only became what they are right now much later in his life. But he is the Oracle of Omaha, and he placed a bet that he wanted to prove to regular people that they can start investing in a very safe and promising way by investing directly in the US economy. And he said that actively managed funds, which stands for funds that have portfolio managers that actively trade on a daily basis, buying and selling investments to make the overall portfolio grow at a much larger rate, much faster. But he said that these funds cannot outperform a simple investing in the market through buying an ETF on the economy that tracks the S&P 500 index. So he said, I place a $1 million bet, and I challenge every hedge fund manager to pick 5 actively managed hedge funds, and the aggregate result of what they are able to produce in terms of returns, he said, will not be larger than what I will get by simply investing in the S&P 500 index. And the bet was to last for 10 years, because index funds, you can see their strength and their performance over a longer period of time. So he announced the bet. No one actually took it until 2007, when only one hedge fund manager decided to take on it. And the bet started, I believe, early 2007. And it lasted for 9 years instead of 10, because the difference of what Warren Buffett's investment made and what the hedge funds made was so crushing that the hedge fund managers simply gave up. He waved the white flag and he said, you win, you win. And the $1 million then that Warren Buffett won from the bet went to charity. But it was very clear example and a case to make this message really simply understood by people. You don't need to have very complex strategies, investments. You don't have to have actively managed funds, pay thousands of dollars to portfolio managers to expect and to hope that they will achieve a high rate of return, when you can simply buy an index ETF like one on the S&P 500 index and just let it work for you. And you don't even have to touch it 10, 15, 20 years. Just let it work.
I love that story. And it is the story that inspired me to really go for it and make me invest. It was so exciting, that moment of investing. I remember you saying when I first started the Money Goddesses Grow System, your program, and you said, you are going to feel so empowered when you invest for the first time. And I was like, oh, really? I could see maybe, but really I did. I felt like I actually had a complete identity shift when I did that, because I felt like a grown-up. I felt like I was adulting, right? And I felt like I was taking matters into my own hands. When I was young, my dad said to us, you must put money in a retirement annuity fund. And he taught us to put money in an endowment fund. I don't know if you still even get those today, but I put away money for 10 years in something called an endowment fund. And I put into an RA. And he got me into that practice from a very young age, which is amazing. And RAs, I believe, are also a really good idea. But now I see how exciting it is. Oh, we're having someone join us. Lisa's joining us. So excited. So I see how exciting it is to not just have an RA and investing through a broker, but to invest yourself. It's a different feeling when you go in there and you choose your ETF funds yourself, and you go in and you look. Since my first investment that I made, I have been running numbers with ChatGPT. So basically, I put in all the funds and I say, okay, what is this going to do? Tracking back for the last 10 years. ChatGPT is amazing for this, I discovered. I don't know if you use it as well.
Yeah, I've tested it just to see if it can give me enough information. If I'm starting like from scratch, can I rely on the information that ChatGPT can give me? And it turns out, yes, if you're giving the right prompts and the right direction and the right background, it can make the calculations and research for you.
Okay, so tell us what we should be putting in the prompt so that we know that we're giving the right stuff. Okay, let me give you an example. What prompt would I put in there for my mom who's 81? So let's say she wants to only invest for 5 years. Would I be able to ask ChatGPT, our oracle, to give us the best possible fund for a 5-year investment? Because I know I can see the difference when you go 10 years, when you go 15 years, when you go 20 years. I can see what the compounding does. But would we go with the most aggressive fund, like something like Tesla, for example? Or would we go with, like, my favorite ETF at the moment is the ETF S&P 500 InfoTech? Because that one is doing 25 to 27% in returns, whereas the S&P 500 is more conservative and it's doing like 10 to 12% in returns. Am I right?
Yeah.
So I'm very keen on the InfoTech, but I know when I go and I listen to all the different people talking about it, and you also warned me, Viki, that if you put it all into that really aggressive fund, you could also lose your shirt, basically. Right? You can lose it. There's another dot-com crash.
Because first you like the diversification because you're betting on a single industry.
Yeah.
And by the way, I listened to Kevin O'Leary being interviewed for a podcast, and I did not agree with a lot of the stuff that he said. But when it came to investing, one of the things that I took away for myself was this rule that he has: no more than a certain percentage on a single company and not more than 20% on a single industry of your total portfolio, just to make sure that if something happens, and we live in an unpredictable world, right? Anything can happen at any moment. And the first thing that will react would be the stock market. And it could crash in minutes, in days, you never know. So if something happens to the technology industry, then your investment in that particular industry can go down. That's why I always, well, advise is not really the right word for me because I'm not an investment advisor, but I just share what I have done and what I have learned. So I wouldn't do that. I could put some of the money on this just to get a overall higher rate of return of my whole portfolio. But the core of my investments would be on a broader index and a broader market.
Yeah.
And some gold and silver, but that's a different
Okay.
side. Yeah.
Okay. Welcome, Lisa, to our call. If you have any questions, you're welcome to unmute if you want to ask Viki a particular question. I know you talked about Tesla. Lisa and I were discussing this last week when I decided to invest. She got just as excited as I got about this. And she mentioned that she's listened to a podcast with a woman who recommended Tesla. But when I went in and looked at my whole scenario of how I'm going to invest, I've just put a small portion in there because if you're only investing in one company, it can be, and yes, it's going crazy at the moment and it has been for a while, but that can go very wrong as well.
And you remember, you are already investing in Tesla when you buy an S&P 500 index because Tesla is there.
True.
So you are investing in it anyway. And if you are more open to taking up a little bit more risk, then yes, you can buy additional shares from a single company. But yeah, you are already investing in Tesla. It's just through a different vehicle.
But a very small portion is in Tesla. What ChatGPT did for me is it's doing my numbers based on if there are crashes. Those are the ones that are more risky. And the recommendation was to go global, MSCI World,
Mhm.
S&P 500, S&P 500, InfoTech, Tesla. Those were the 5 things I was planning to invest on my next round. Because on my first round, I didn't know about the global one. It's called the CoreShares Total World, and it tracks the FTSE Global All Cap Index. Was that the one you were recommending that we were struggling to find in South Africa? Okay.
Yes, yeah,
So,
that's the
okay.
MSCI.
So the MSCI World Index is the large and mid-cap companies from 23 developed countries, and that's 1,200 companies. So I'm going to be doing MSCI World as well in my next trade, and I'm going to be doing this global one, this CoreShares Total World Stock Feeder that's tracking the FTSE Global All Cap Index. Now this one's a little bit different. It's 9,100 companies. It's worldwide, but it includes developing and emerging markets, because emerging markets can go bigger. Sometimes, in some years, the developing countries are doing the best, and in other years, the emerging countries are doing the best. And it's also got mid cap, large cap, and even small cap companies in there.
One thing I need to pay attention to, all of these indexes, these funds, they invest in companies. So that's stocks, which are riskier because it depends on a number of different factors. To balance the risk of investing only in stocks, no matter if they're through funds or direct investments, like buying direct shares from Tesla or any other, Amazon, any other company, we need to balance that with investing in a different vehicle or a different asset class that would give us a cushion if something with the world economy goes wrong and it starts going down. Because in cases like these, we can rely on assets like gold and silver and precious metals, which do very well in times of economic downturns because they are considered safe havens. So what I do is I not only invest in stocks through ETFs, but I also invest in precious metals. So they balance each other out. And another type of asset class that could balance stock exposure can be investing in bonds. Now, I don't know if you want to go in deep detail of what bonds are, but let's just say that they are safer, they are long-term, and they give us lower rate of return, but they're much more appropriate, especially for people who are approaching the age of retirement. And for example, if you have invested in stocks and the stock market for a long period of time, but you are approaching the time when you want to get out of the market, you can convert your portfolio to buy more into bonds and similar assets that will give you a steady inflow cash with much lower risk.
So for my mom, for example, at 81, investing for 5 years, would you rather go bonds than ETFs?
It depends on how risk averse she would be. If it's spare cash that she wants to play with, then that's fine. You can go with stocks. If it's money that she is relying on for retirement, I wouldn't risk it that much. I would go probably with bonds and precious metals like gold and silver. They've been doing absolutely fantastically. Over the last 4 years, my investments in gold and silver, and again, I'm investing in them through ETFs. So you can find an ETF on that. You don't need to buy physical gold or physical silver and keep it in your house. Instead, you can buy shares from an ETF. But the investment in those two over the last 4 years gave me a more than 80% rate of return. 80%.
What?
For 4 years.
Wow.
Yes. And has been in a time when the economy is also going up. So the stocks are doing fine, but also precious metals are doing great.
Wow.
Yeah.
And how do I do that? Because I actually saw an email come in on Easy Equities this morning saying how well gold is doing. And then the next email was about your first step into property. So the other thing I wanted to ask you about, because Money Marks on his video, he said, yeah, you can go all in on that core global, the 9,100 companies that's all over the world. Then you'll be totally diversified. So you could go all in on that. Or he suggested going in on some REITs. Am I pronouncing it properly?
Yeah.
So it's, what does that stand for?
These are special instruments that are designed to only invest in real estate. So real estate trust, I think. Yeah, I think that's what the acronym stands for. But the beautiful thing about REITs is that they are obliged by regulation to pay out the majority of the profits to the investors. I believe it was something like 90%.
Wow. So he recommended REITs as well. I don't know why I haven't been attracted to investing in that, but he was just talking about what to put into the tax-free savings account, because there's something in South Africa. I don't know if you have this everywhere in the world, but in South Africa, they've created a TFSA, which is a tax-free savings account. But he's saying, don't use it as a savings account, use it as an investment account. And so you open up your tax-free account, your TFSA, in Easy Equities, and then you choose, he was helping us choose the right things to go for in that particular account, because you want to start there with tax-free investments. So to maximize that every year, you'd be putting in 3,000 Rand a month, just for the South Africans on the call. Hello, Lisa. So 3,000 Rand a month, and that is 36,000 Rand a year that you can put into your tax-free savings account. And your maximum over your lifetime is 500,000 Rand, so 500,000 Rand. But that is just how much you put in. It's not how much it grows by. It is going to now compound. You could be getting out 3, 4, 5 million from that 500,000, but it's going to take you 13.88888 years or whatever to max it out, right? So that's my first goal, max out that. And then with my free money, that free money drops into not the tax-free account. So that free money, I could really go very aggressive on that, right? The free money in Easy Equities, and really play. Like the first thing I invested in on my 50 Rand was in the Satrix 40, which is the top 40 South African companies. Because, you know, I recognize them. Like Naspers is the first one. I used to work for an advertising agency, and we used to work for Naspers. Like everybody knows what Naspers is. It's a publishing company. I thought that was a fun one to invest in. But now, having listened to a few more videos, they're saying from a number of different South Africans, if you're going to be investing in stocks or ETFs or anything, don't invest in South African ones, because you're already, if you have a house in South Africa, you're invested in South Africa. That is an investment. If you have unit trusts or if you have RAs, there has to be a certain portion of that invested in South Africa. Your RA, your retirement annuity, has to be partly in this country with some offshore. So this is your chance when you're now investing to actually invest offshore and to get as much of the global market as you can, because the more you can get of the global market, the safer you are, really, in a sense, right? The more diversified you are, the safer you are. So that's how I'm understanding it now.
Yeah.
Do you recommend REITs? Do you think we should go for it? It sounds promising.
Now with REITs, I have not invested in REITs myself. I've looked into it. I think what stops me is that the real estate market, especially if the REIT is investing in new construction, that market, the construction market, it can be very volatile and can be influenced a lot by outside environment circumstances, economic realities, even political decisions. It's just not my soul's calling, to put it this way. But it's a good option if you like real estate, if you like, but it also takes a little bit of research to know where this REIT is investing, like geographical regions, and what kind of projects real estate project is it investing
Yeah.
in? So it could be new construction, it could be fix and flips, it could be rental properties, it could be a lot of different types of real estate investments. So you need to know, like when you look at the prospectus of the fund, you need to understand exactly what they're putting your money in.
Got it. Okay. So talk to me a bit more about this gold and silver, because that seems to be a really good investment. And that is kind of like a hard thing here for us in South Africa, because obviously gold is mined here and diamonds
Yeah.
and all of that kind of thing. So I don't think that's something for the tax-free savings, because he didn't mention that as an option for tax-free savings. But I think for my fun money, my free money, that would be a really fun thing to invest in. If I do it the exact same way, is it a fund? How does it work?
Yeah, the financial experts that I have been learning from would not recommend investing in gold and silver and precious metal, well, specifically in gold through ETFs, but instead buying coins or any kind of form of physical gold and keeping it safe in your house. Now, for me, there would go to talk about all the benefits and the advantages and disadvantages of that. But for me, I just don't feel safe enough to deal with it. I don't want to go through the whole process of picking the right coins, making sure they are sellable at the time that I want to turn that into cash, because it's a whole different chapter to dig deep into. So for me, it just made more sense to use index and ETF that invests in gold itself. So the fund buys physical gold. So it's almost the same as if I'm buying it, but instead I'm just buying shares from the fund. And there are a lot of funds available. I don't know if these fund options are available in easy equities, but the investment app that I'm using, there are a lot of options to find funds that invest in gold, that invest in silver, platinum, and all kinds of different precious metals. Now, the thing with these funds is that, as I said, they do much better when the stock market is volatile and uncertain. That's when the price of gold and silver goes up. But as I said, the past few years, we've been seeing a healthy market, to say as a general observation, but at the same time, gold and silver are also doing great. And this, to me, has a lot to do with, specifically for silver, being used in a lot of industries, in airplane and technology, and so the demand for silver is growing, and which drives the price to continuously go up as well. So that's why I keep my investment. I'm so happy to see those numbers in all green, and yeah.
Oh, that is so exciting. Oh, okay. I'm definitely going to play with that. I'm going to figure out how to do it. There must be South Africans talking about it, because I mean, gold and silver, very exciting. I agree with you. I prefer the idea of doing it as a fund rather than actually going and buying physical gold. Besides the fact that one can get broken into and it can get stolen, like that's already a fear.
But yeah, I think what stopped me there was that there are certain types of coins and with stamps that you need to understand how sellable they are. If you can actually sell it later, and you have to be careful with the types that you select. But yeah, it could be a good option. I know a couple of people who do that, and one is a pretty close relative who invested in gold, like physical gold. But that's my way of doing it.
Amazing. Yeah, I also have a friend in Ireland who I think that's what he sells. He sells gold bullion, I think, gold bars, gold bullion, whatever. Yeah, and doing exceptionally well with it. So yeah, there is that option. I understand there's that option, but I don't think I'm ready for that option either.
Yeah.
It feels next level. This is feeling really ease. I literally do it all from my cell phone or from my computer, and it's really simple and exciting.
Yeah.
And what it's done, it's pushed me to increase my targets in my other business, in my coaching
Yeah.
business. Because what I want to do now is that every time somebody joins me, I'm going to take 20% of that and I'm going to invest it, because now I'm opening up a TFSA for my son as well, because you can do that. And so that when he turns 18, if I can fully invest, do my maximum 36,000 every year until then, he is about to turn 12, then he'll be 6 years into fully investing his TFSA account. How exciting. What a gift to give someone when they turn 18.
So amazing.
Yeah, I know, it's so exciting. And I'm also teaching him and showing him the numbers. If he leaves it there and carries on filling it up himself, how it's going to really grow, because I can see how the compound interest grows after 10 years, after 15 years, after 20 years. So now what I want to talk about is, say now I do decide I want to retire. So I have been now investing, I've decided on my portfolio, and I may be changing it around. The beauty of this for me is I don't get money on a monthly basis. I'm not a salaried person. So I only get money in when my clients pay me. And so when I introduce a new client or enroll a new client into my program. So for me, it makes sense to not have a debit order going off every month. I'm going to do it every time money flows in. So flowing in, then I take some aside. And that is so easy to do on this platform. But now, so let's say that I probably won't do the same thing every month. I'll probably learn about a new share. Is that okay?
It's a rabbit hole. It's a rabbit hole. Once you get into it, it's just whoa.
I know. And does that matter? Does it matter, or should I stay with my same thing every month? Because I know some people have said this should be boring. Decide on what you're going for and invest in that every month and just set it and forget it. What do you think is better? Should I be jumping around and trying other things, or should I choose my split of what I'm going to do and then just do that for 10 years, for 15 years, whatever?
Okay. In the beginning, I was like this, exactly the same. I wanted to try so many different things. I wanted to invest in this. I wanted to invest in that. I even bought single company shares. I have individual investments in a couple of companies just to see how that goes, or because I followed a financial guru's advice. And yes, in the beginning, all this excitement drives you to research, to want this, you want this investment and that investment. And to me, it's just a natural process that will just take a little bit of time for you to settle in. Once you get to know a lot of the options that you have, because you are in this phase right now where you discover, oh, I could actually invest in gold through a fund, or I can invest in agricultural commodities or something else. You can invest in anything, anything. And this is what makes it so exciting. And at a point, it might become too overwhelming. So once you get to know all of the beautiful dishes that are waiting for you at the table, you kind of get to pick and choose and then stick with your investment pie. And I wouldn't recommend changing it every week. Maybe you can look at it every month just to see how it's doing. And as you approach the time when you think you're ready to get out of the market, then there are different strategies to exit. I think that's one of the questions you were about to ask me. What do I do at that point? So there are different options. You can completely exit the market, like sell everything and get the cash. That's the easiest, most logical option. Another option is to turn, as I said, most of your investments into bonds and safer investments. Keep them there so that they continue working if you don't need the money, right? But you can also withdraw a certain amount every month and keep the rest, keep working for you. Another option is just to leave it there, right? You can convert your portfolio to buy stocks from what they call the aristocrat companies, or I think blue chip. These are companies that pay out regular dividends. So every month you just get the dividends or whatever frequency of payouts they give you, use the dividends and live off of them.
Ah,
But
so
yes, you can do that.
That's what
You
I was
just,
wondering. How do you actually get income out of it? And what about, so when I turn 55, then my retirement annuity becomes due. What do you recommend I do with that? Do I take this money and invest it now, reinvest it, rather than just using it on something? Like, what should
it
I?
very much depends on your lifestyle. Do you need the money when you're 55? Would you need this money now for some projects or for some investment or just to sustain your lifestyle? If not, I would absolutely recommend first having your life fund, something for emergencies, something for unexpected, even beautiful occasions that you just haven't planned financially for. Leave some portion there. A portion goes to safeguarding yourself and your family, because that's super important in our family strategy. That's absolutely crucial. And then the rest, you can reinvest them. You can add them to your current investments or use them for safer, longer term investments like bonds, like gold, like silver. Really different options, but it is a very individual case by case. And it depends a lot on the person taking the decision, because it is always your decision. You can have all the options in the world, but it's totally up to you. And you know yourself, the best, right? You know how tolerant you are to risk. You know your time horizon or your expectancy. And so I can only help guide you how to structure it to get there. But yeah, that's what I loved so much about what you said in the beginning. It's not that much how much money you're putting in. It could be just 50 rand, $50, 50 whatever currency you're operating in. It doesn't matter. The feeling that you are in control, you push the buttons, you make the decision. Even if it's a wrong one, it's your decision. And you're always constantly learning and growing. And that feeling of sovereignty, of empowerment, you can't get it in such an intense way with, I would say, anything else. But when you get hold of your money and you decide what you're doing with it, that sense of empowerment, I personally haven't gotten from any other experience in my life.
Yeah. And I love the idea of money working for me, because
Yes.
I never thought that little old me would ever, with my erratic income that is up and down, I never thought that I could feel this empowered and have this much control over money and actually have money work for me. I thought that was like the last thing, the cash flow quadrant thing. I
Yeah.
thought that you only become an investor right at the end, once you've done all the other things, you've moved across the levels.
Yeah.
And I just
Yeah,
love that I'm doing it now.
that's one of the myths that has been stopping people from investing. They think they have to have a lot of money to become an investor. No, you need $10, you need $50. You can become that person. You can have that identity shift right now. Like today. I'm sorry. I just got so
Love it.
excited when you shared your experience of what it feels like to be an investor. And you can, yeah, as you said, you can do it with the 50 Rand that you get for free when you start your easy equity account.
Yeah. Well, I think that 50 Rand, if I noticed how it worked, that only arrived in my account after I'd funded it. So I put 100 Rand in first, which is like really nothing. I just wanted to make sure that I had the right details, because they remind you a few times that you must have the right little number if you're going to put the money in, that it goes into your tax-free savings account. So I was just making sure that was all right. And then, by the way, to South Africans, just make sure as well, if you have got unit trusts or any other things, check whether they're in a tax-free savings account already. You may already have one. You don't need to use the same one. It doesn't need to be complicated, but I checked and I noticed that my unit trusts that I have already are in a tax-free savings account. So you have to deduct that amount that I'm putting in every year, so that you don't if you overstep, if you go to 36,400 Rand, then you're in for 40% tax. Okay. So you're not to go over 36,000 a year. So just watch for that in terms of your investing. So I'm only putting 100 Rand a month into unit trust. It's barely anything. So I've just got to put in whatever, 36,000 Rand minus 1,200. Okay, done. Just so you know, because we don't want to make these silly mistakes and then get taxed hugely. The whole idea of the tax-free savings account is to save you on tax, not to give you a tax bill at the end of the year.
Yeah, that's not a pleasant experience. So yeah, do the numbers. You decide how much to put in one or the second account, but just keep track of what you're putting where.
Yeah, I've created an Excel spreadsheet already to track everything. There's probably a better way to do it, but at the moment I'm using an Excel spreadsheet and I can actually see it. I can track it in my accounts, obviously. I know exactly what's going into both, but yeah. So fun and games. I'm so excited. I feel so empowered. I feel like I've had an identity shift. And I encourage anybody who's on this call, just if you don't have a lot of money, just go and get your 50 free Rand and put another 100 Rand in, and then the 50 free Rand will drop, and invest just a tiny little bit just to experience the feeling. And I will put below what my current decision is in terms of my little split and what they're called in South Africa, so that you can, if you want to follow that, you can. Obviously, you don't have to. These are just ideas. But I will also refer you to the other channels that I've been watching where you can go and really listen to the South African guys explaining. I'm just talking to the South African market now.
Of course.
To those guys. Yeah. Otherwise, listen to Viki. And Viki, let's tell them about where they can find you, because you've got this beautiful community that you're building on Skool. So tell them about how they can contact you and learn what I learned from you, because I didn't only learn how to invest money. There was so much more in that program.
Yeah, that's actually the cherry on the top, investing. But what I really enjoy and what I'm most passionate about is really helping women realize how empowered they can be when they take money matters into their own hands. And we do this using the Money Goddess framework, which, if anyone's interested in learning more about this, what's the Money Goddess framework, what's the Goddess way of taking care of your finances, all the way up to starting investing on your own for the first time, because you didn't just drop in the program, took the final piece of the course and started investing. It's building blocks that you step on gradually so you can safely go to that investment phase. And it doesn't really need to take long. It just, depending on how ready you feel for it. But anyway, digressed. We are building together this beautiful Skool community called Money Goddesses. I welcome all women who are interested in learning more about the investing and about managing your money in a way that feels feminine, that feels like flow, that feels like empowerment, through working with your goddess archetypes. And if you don't know what that is, come join us. You'll see it. Access to the group is still free, but it will be paid after the 111th member. So you want to hurry up and get in before all the spots are taken. And we're almost halfway there.
So. Yeah. So there's such a vibe in that community already.
Very different.
Yeah.
It's very different because we do talk about money and we do talk about mindset, money mindset. And we do talk about goddesses and divine places. I share my travels with the group, and I'm amazed at the response and the support that we've been getting for all kinds of topics, money related there. So yeah, I'm truly, truly grateful. I actually never thought I would be building a Skool community, but when life throws you in this direction, you just follow the crumbs and do whatever it needs to be done.
Exactly. And you're doing such a fantastic, as with everything you do, Viki. It is going really, really brilliantly. Your energy attracts everyone. It's really amazing. And you've also got a masterclass in there as well that people can watch where you can really get a good feel for the whole thing. And there's a little quiz that you can do so that you can find out what your money goddess archetype is, because it's usually a combination. Like, for
Yes.
example, Viki is Athena, like strongly Athena, right? I'm
Yeah.
strong Lakshmi with a little bit of Persephone and a little bit of Isis. It's so much fun finding out who you are. And then the other people in the group go and say, oh, yeah, I'm that as well. I've also got a lot of Lakshmi. It's so much fun. It's a real vibe in there. I love the money goddesses. And yeah, thanks so much for your time, Viki. Again, you've been on this channel a few times.
Always a pleasure. Always so interesting because when we get to talk with each other, so many topics, so many questions, so many insights come up, and I never really notice when the time is up, so I can keep talking
I know.
as long as you have any questions.
Yeah, I'm sure there's so much more to say. Lisa, do you have any questions before we close off the call? Or do you want to type them or anything? Or do you have no questions? If everybody's happy, okay.
No, all good. Thank you so much. That was really interesting, very helpful. Thank you. Thank you so much. Hey.
Oh, pleasure,
Thank you,
Lisa. I'm
Liz.
so glad you enjoyed it. Thank you so much for being here. It was wonderful to have someone join us. Hello. Wonderful to have you join us, Lisa. Thank you, Viki. That was absolutely amazing. I really appreciate you being here and sharing these nuggets of wisdom with us. I'm so excited about all of us who are going to now start investing and get to retire wealthy, even though we started later than most. And for those of you who were able to join us, thank you so much for tuning in. And if you're new to this channel and you enjoyed this, please let me know by leaving a comment or liking and subscribing so that I know to make more videos like this. And come and join us in our Reinventors Playground. You've already missed our 5-day longevity challenge, but if you're in the Reinventors Playground, you will find it in the classroom. And so you can go and catch up on that. So come and join us in our Skool community. You can go to this link, laurenkinghorn.com/reinvent. We'd love to see you on the inside. Bye for now and have a beautiful, beautiful day.